Hey everyone, and welcome to my channel. And today we are going to analyze the S&P 500 and the Nasdaq and look at the great dip that happened today. Today was one of the really red days we've seen in a really long time. So if you look at the last week, there has been a significant decline over 1, 2, 3, 4, 5, 6 days, and today being almost 2% of a dip. And if you go back in history, history tells us a lot about what the future holds and how does it compare with other events of such a significant nature. So if you look back in history, you can see that we've had another significant dip in March 2020, and it's been 1, 2, 3, 4, 5, 6 days. So it's something very similar to this. We've seen a big dip, and if you compare the two, you can notice that the dip actually touched the blue 200-day moving average. So let me give you what these lines are. So the blue line is the 200-day moving average, the purple line is the 50-day moving average, and the yellow line is the 20-day moving average, and the light grayish line is the 10-day moving average. So that's just to give you a range of like where the market is trending. Now, if you look at if you look at how the markets perform now in comparison to what we've seen in March 2020, so you can see that the market actually touched the 200-day moving average. It bounced back and kind of like played around on the 200-day moving line and then dipped down again, and it went down strong. So if I was to talk about how the markets performed today in comparison to the previous instances, and again, history is a good teacher, you can notice that it's on the 200-day moving line right now. So there is a chance that it might bounce back a little, or it may just take another dip and then come back. So stay tuned, pay close attention to how the market reacts to this 200-day moving line. And now, if I was in the market, and I love trading the S&P futures and the Nasdaq futures, not just because of the leverage, but also because it's easy to get in and get out of a trade rather than having 50 different stocks or 50 different companies for diversification. The S&P is a good tool for diversification as well, in my opinion. Now, if I was to short the market, now this is where I would do it. So I would keep an eye on the 50-day moving average. So you could see the 50-day moving average it was kind of flat for a few days, and this is again the daily, and I'll touch on the weekly very soon. It was flat for a few days on the 50-day moving line. So that tells you that the 50-day moving average line was significant on a reversal trend. As soon as it broke the line, now I would not short it close to this line because there is a chance that it could bounce back. How do I know that? If you look into the past, you could see that it tried going down in the past too. Now you might think, oh, did it actually break this, and is it going to touch the 200-day moving average? No, it did bounce back. So this is something to keep in mind because this could happen at any given point. Like it was another instance as well. Now that it happened, it broke it. So another point would be this particular line, and you see like this is where it ended for the for this particular day. So a good way to start shorting to be safe. Now, if you're a more aggressive investor, you could have shorted it right here and put a good stop loss on the 50-day moving line, and you'd be safe. Now, another good technique to manage it is to start shorting it close to somewhere around here, and then take it all the way down until it touches the 200-day moving line. Now, at this point, I would be a little more cautious because there is a tendency that the market could bounce or it could go down further. We do not know, but if you want to be more on the aggressive side, you could still hold on. So it's up to you, but this is just how I feel that the market's progressing so far. Now, if you look at the weekly charts, now I love looking at weekly charts in comparison to the daily. The weekly is good for long-term trend indicators. The daily is good for entering and exiting the market. You should not look at long-term direction on the daily. Why? Because it doesn't give you a complete picture. It could be very choppy. It could be that today's up, tomorrow's down. The weekly would give you more long-term trades. And this is if you are looking to trade maybe for a couple weeks, maybe for a month, maybe for longer. And that's, in my opinion, the best time frame to trade. And I'll touch more about those in other videos as well. So as I look at the weekly charts, now this is again the S&P 500. The yellow line is the 20-day moving average, the purple line is the 50-day moving average, and the blue line is the 200-day moving average. So you could see that it broke the 20-day moving average fairly early. So if I was in the market to short, I would have shorted the market, maybe just waited for a little longer until it broke down a little longer. So say 45.50 or 45.40 would be a good point to short the market. And I would let it go down, all the way down. And now if I look at the weekly chart, there is a strong possibility that it could go all the way down to 4319, because that's where the 50-day moving average is. Now, let's check history and see, has the 50-day moving average actually held its ground in comparison to previous instances where it touched it. So you can see it touched the 50-day moving average and bounced back. So that means it's really strong. And this is 2019. Let's look at other instances too. So it touched, it bounced back, it again kept bouncing back, and it eventually gave up on the 50-day moving average. So that's 2018. So this is way long time ago. The only time that it actually broke the 50-day moving average was the March 2020 decline. And it declined, it tried rising up off it, and it broke through, and it went down to the 200-day moving average. Now the 200-day moving average, again, like you can see here, it's a strong moving average. So overall, to summarize, like I feel that the trend is on the decline. There is a strong tendency that the market may hold its ground a little on the 200-day moving average on the daily. If it breaks it, it's heading down to 4319 on the weekly, and that's just in my opinion. Now, if I just look at the monthly, and this is just very quickly, you can see that we've actually made a strong incline or uptrend that we've seen on the monthly charts. Now, if you were a long-term trader and you only traded looking at monthly charts, if you had to purchase either the S&P 500 or any long-term charts way back in March around the 50-day moving average, knowing that it touches, it bounces back very strongly from it, you could have really captured a strong trend all the way up there. And we'll talk more about trend trading and how beneficial is it very soon. But for now, it's just a daily update of how the market's trending. Now, as we've covered the S&P 500, I want to quickly touch on the Nasdaq. Now, if you look at the Nasdaq, and I'm going to start with the daily charts, the Nasdaq 100 has broken through the 200-day moving average. So what it tells me is that the Nasdaq doesn't really respect the daily time frame on the 200-day moving average, because it not just closed one day below it, but it's a second day, and that means it's heading down further. Now, if you compare the Nasdaq with the S&P 500, the Nasdaq's gone up a lot more. So a good way to look at it is through the the weekly charts, and you could tell that the Nasdaq's like gone up significantly more because it's got a lot of technology companies in it, and the technology has trended the most in the pandemic. In the weekly chart too, like the Nasdaq has broken through the 50-day moving average. Now again, let's look back in history and see how it has performed in the past. So the closest that it's touched the 50-day moving average has been in March 2020. Now again, if you were a long-term trader and you saw the Nasdaq touching the 200-day moving line, if you had to buy somewhere around here, if you're more cautious somewhere around here, you would have scaled up all the way till maybe like if you want to swing trade, you could probably like exited some over here or some over here if you'd like to trading like the highs of the trends. But a good time to exit would be around your if you were a really long-term trader, and that would have been significant profits for you. So that's just an update on the weekly charts on the Nasdaq. In terms of technical analysis, there is a strong possibility that it could trend lower. We'll keep an eye on how the market reacts on Monday. Is the next candle, so this is the weekly chart, so is the next candle going to move higher? Is it just going to hover around the 50-day moving average? It's going to decline lower. If it's going to decline lower, there is a chance, is there a strong possibility that it could decline way down till the 200-day moving average, and that's going to be a significant decline to a lot of technology company stocks. So speaking of technology company stocks, let's look at how the technology and the S&P 500 have performed in today and also in this week. So we'll start off with the daily performance. As you can tell, everything was red. There was no way to hide into the market. And there could be a few pockets of green, but it's really hard to predict because it could be one day this is green, tomorrow in energy is green, and it could just like revolve around all of these stocks. A good way to really look at how is the market trending is to look at the weekly performance. Now, the chart that I use or the platform that I use to analyze this is FinViz. I really love it. I think you should strongly check it out sometimes when you have some time. But this is more in terms of like giving you a complete picture of like how the S&P is performing, how the Nasdaq's performing, and how the sectors have been performing. So if you look at the weekly charts, Google has declined almost 6%. Amazon's gone down significantly with almost a 12% decline. Tesla, Home Depot. So these were the strong performers through the entire March 2020 to Jan 2022 like uptrend, and the strongest performers have been declining down the furthest, and that's just because the valuation that they had has been significantly higher, or they have been overvalued, and now they're trying to correct themselves. Netflix has been one of the strong decliners, 23% in a week. That's really bad. So overall, every sector is red. Now, a good way to tell which sectors have been performing higher or lower is to look at the sectors. Now, if you're in the mood to buy stocks, if you think stocks and futures or a combination of the two is something that would interest you, a good way to do it is through the look at the sectors and see which is trending higher, which is trending lower. So the communication services on the daily has gone down 3.38%. But let's look more on the weekly because that's what gives you a complete picture. Consumer cyclicals is minus 8.5%. So that's been significantly in the red this week. Now, the energy sector is up 12%. Now, that's just a rare sector that's still in the green. I would still be cautious about stepping in now because if it's 12% up already, there could be some correction. So just wait until it moves closer to your 50-day line or your 20-day line before you go ahead and take a purchase in there. So that's it. That's all my update for today. Today's been one of the big red days in the S&P and the Nasdaq. So stay tuned for my updates. I'll be doing this every day, giving you a snapshot of how the markets perform, what's in store for the next day and the next week. So stay tuned, more to come with my daily updates. And thank you once again for tuning in, and I hope you like the content that I have in store for you.